Welcome back to Next Gen Investing. It's now time for FOMO. Today we are talking Alphabet, which is making less than a % move to the downside today with a rare price target cut from Wells Fargo. So joining me now to discuss more on this analyst note and all of the things that are impacting Alphabet right now into their third quarter print October 22nd, I'd like to welcome in Caroline Wood, Senior Markets Correspondent for the network. So Caroline, break this down for us, because I read the initial headline here, didn't seem super positive, but I mean, there's going to be a lot more of opinions as I think we approach these Mag 7 earnings.
Hey there, yes. As you said, Alphabet shares under some pressure today, down a little less than 1%, although the second worst performer on the Mag 7 today behind Tesla. It's getting a price target cut from Wells Fargo ahead of earnings, which you said are out on October 22nd. The analyst over at Wells cut its price target to 182 from 190, kept an equal weight rating on shares. So Alphabet's currently trading around 165 right now, so still about 10% upside from current levels with this reduced price target. Shares, of course, have been under pressure for the past few months over regulatory concerns. The Justice Department saying the search business is a monopoly. They're facing challenges from the government, other challenges from the government as well. And this analyst says as those regulatory headlines abate, attention will return to the fundamentals, and they're actually a bit cautious. More specifically, they're cautious on search growth despite a better than expected first half of the year. They're saying that while near-term growth is tough to call, they're taking 100 basis points out of search growth in 2025 on travel spend shift to social. So basically, they're reducing their 2025 constant currency search growth by 1% to 8%. Citing rising challenges in some key business sectors. Additionally, they are slightly increasing their operating expense projections for 2024 and 2025 to account for the impact of a weakening dollar. So this was an analyst already on the sidelines, if you will, with an equal weight rating and just reducing the price target by a bit. That being said, different story from Pivotal Research. Another analyst we heard from recently has a much more bullish call on Alphabet, initiated coverage with a buy rating and a $215 price target on shares, says it has an attractive valuation in any realistic scenario, and all of the regulatory risk actually priced in at these levels. Says Alphabet appears to be in a very strong competitive position with a deep moat around their dominant core search business model, and then also says that they have dramatic growth potential in cloud computing as well, even if they're the number 3 player there. So Pivotal actually bullish because of search, whereas the Wells Fargo analysts a little bit cautious on that front. Alphabet shares are down about a little less than 1% today, still up about 18.5%. Year to date, but they saw that big drop off starting in July and haven't regained a lot of those losses, as you can see on as you can see on the chart there. You can see the drop off. Sorry, I was trying to read the small lettering. So under some pressure today, but analysts still largely bullish.
Yeah, and as you mentioned, the stock price has come down, Caroline, but the price targets largely haven't. I was looking at sort of the spread between the stock price and the average consensus price target on the street over time. It's about, it's coming down a little bit since the stocks recovered a little bit over the last month, but it's basically coming down from the highest point in the last 5 years. So I would expect that either more of these price target adjustments or perhaps Alphabet to start recovering if history serves as any guide. Any other feelings or anything else that you noticed kind of generally across the board at analysts that stuck out to you?
I think, the fact that analysts are still largely bullish, despite the fact that there are all of these regulatory overhangs on shares that have been weighing really since July. If you take a look, almost 80% have a buy rating. And, when we talk about the price targets, the median is 200, so that implies more than 20% upside from here. We'll see if we do eventually get more adjustments, as you said. Keep in mind, with earnings coming up, there is a chance that we might. But even if you take a look at the high on the street is 230, so $30 higher than the median, but the low price target on the street is 170, which is actually also higher than where Alphabet currently trades. So I did think that was notable, that even the lowest price target on the street does imply a little $4.60 upside from current levels.
well. And I feel like for Alphabet right now, the key is just like avoiding some of the drama. Like I feel like the more and more we hear about these various like legislative measures coming against them and antitrust concerns, like the better that they stay out of the headlines at all, I think. And that's seemingly like the case right now. We want to avoid all of this like negative speculation. I guess that's sort of the theme for a lot of these Mag 7 with such high expectations going into their quarterly prints in just a few weeks. But we'll leave it there. Appreciate the insight as always, Caroline Wood, Senior Markets Correspondent for the Net.